If you were to go back pre-COVID, is there anything that you would have changed or adjusted about your strategy, looking back, knowing what you know now?
I, um, Professionally, I cannot do that exercise, right? Oh, I can concentrate on one position because it has done so well. But truthfully, we have not changed our strategy at all.
I don't know if you have an answer to this one, Xin, but I was in a debate on LinkedIn a few months ago, and I posted up a chart which showed the contribution of GDP between the G7 versus the developed nations, particularly BRICS. And it was literally like an inverse curve where G7 was contributing less and less to global GDP while BRICS was up on almost a parabolic scale. And I made a comment that if you combine this with the bounce in February, that we are, number one, technically in a rebound and that we found a bottom. And number two, at least on a longer scale, we're looking at more persistent, sustainable growth from this side of the planet. And some of the comments that were on my LinkedIn were really questioning not necessarily the tactic of accumulating at this stage, but more importantly about what is the long-term vision or the long-term catalyst for and the reasons for reinvesting into China. And this is particularly from the perspective of longer-term institutional investors. Yes, this is a great time to accumulate, but what do they have to look forward to? And let me position this as asking, we touched upon potentially the unlock of consumer savings rate, potentially the restructuring and the clearing of this real estate issue, which most feel that at least we can see what it is. Now we know where to move. Is there anything else that's giving you some semblance of bullishness? And I'm not saying you're bearish. That's what I mean, Xin, right? We have very frank discussions about China, but is there any, modicum of bullishness that you can see that we could incentivize longer term investors to come into the market besides just relative value and accumulation?
First of all, I'm not a macroeconomist by training. Obviously, being in Shanghai, looking at these companies, hundreds and thousands of companies that we review, obviously we have some.
Just your personal view, right? Like I'm not, this
Yeah,
is even outside
understand,
the book. Yeah.
understand. Actually, for the most recent macro data that we see, it's not good. Okay, it's really poor for China. But in the consumption arena, what's lacking is confidence, right? Like you just said it, the savings rate is very high. People are not spending. People are not spending stocks. They are not investing in stock. They are not spending in grand scheme of things. Okay, they're not spending in restaurant, for example. So I don't know what the government needs to do, but what the population needs is sense of confidence, so they will invest. From my point of view, there's a lot of talks of SOEs, right? Protecting SOE, that's the driver of the economy. But I'm the opposite. I think they should stimulate the private business. They are the employer or the staff of employment, right? And that's what they should do. But at the moment, we don't see any of that. But there's a major Congress meeting in China that's coming up very soon, right? And hopefully there will be a change of tone to stimulate the private economy more. So that's the two areas I'm looking for, right? The consumption doesn't look good, but it's not set in stone. Any kind of event or policy can turn the tide. And you experienced that in the May holiday that was just passed, that we get 7 days holiday in China. I'll give you one anecdotal fact, right? So high-speed train out of Shanghai, okay? Not the whole country, out of Shanghai, was sold out. It was sold out. So that means there's a lot of local traveling, right? Maybe people did not choose to fly to Japan or Thailand. They chose to go outskirts of Shanghai. It was sold out. Not one ticket was available. So there's definitely spending power. But how to get people start spending, that's anybody's guess. But the potential is there. And it could happen very quickly too. Just like the stock market, right? Just needs three uptick to get them excited.
Yeah. Religious, I think he called it, to turn them religious.
Yeah, yeah. And same, I do think the central government should come up with something that it's a confidence issue too, right? It's not about stimulating the private enterprise to to do X or do Y, right? To give them confidence so these private enterprise will invest in new capex, hire more people. That's how you get the economy turned again.
Have you thought as it yourself personally what that policy might be? Like if you're in the driver's seat, if you were at the CSRC or you were, the regulators, even the Treasury, what would you do if you were if you're an advisor, if you had the ability to build a program?
Yes, I do have one. If I was that someone, I would do it. But unfortunately, they will never do it, which is to lower tax. Easy, right? Yeah.
Tax rate is right now what, roughly about 20%, right?
Yeah, all kinds of tax, right? It's all it's a button, the few button in their hand, a knob, I should say, they can turn left, turn right, right?
Yeah.
But they haven't touched that, right? Unfortunately, the government, politically, obviously, you can see they did the right stuff, but they wasted a lot of money on COVID.
Yeah.
Some of the provincial or city level government, they want increased tax to recoup whatever money they have spent during the COVID period. So we don't see that coming. The government has a lot of tools. I just mentioned one that's kind of easy to do in my mind.
Yeah. Loosening up fiscal policy. Of course, they have to balance their books. A lot of the municipal governments are still working through a lot of debt. Land sales, which has traditionally been part of their income, have been hurt. And now with the workout of pricing, at least they're coming out on the right side of the curve. But yeah, I can imagine the motivation to raise taxes is a very easy concept for them, but it would definitely hurt the market even more.
In terms of the system, right, the Chinese system, I'm on the optimistic side, really, because if you ever do any business in China, there's a lot of internal competition, right? A province will fight over where shall this go, right? Shanghai won, Beijing lost, for example, right? So that's, if you control it, right, it's healthy. If you don't control it, then there's going to be a lot of redundancies, right? Like multiple steel factories, the overcapacity, all that. But if you do it in the right way, it's very healthy competition, right? Same way with politically speaking, when you move up in the government, you need to be trained at the provincial level. You need to be number one at the provincial level first. You have to prove yourself. We have so many provinces, 30 plus, and you can pick from any one of the 30. You have to prove yourself at this big province. And one big province in China can easily be beat a country in Europe, for example, in terms of whatever, in terms of population, in terms of GDP. So the system, if you do it right, it can start humming again.
Fair. Well, I want to touch a bit about competition. And I don't know if you can speak to this because your focus is primarily on the domestic market, but surely you must keep an eye on what's happening in other parts of Asia. Right now, Japan is coming off a very, very strong year. The Warren Buffett trade driving a lot of liquidity into the market. South Korea is also coming out with a fantastic year. They call it the ABC, the anything but China trade. And so all the fund flows, the FDI that was previously in China receded and are being redeployed in Southeast Asia, in Korea and Japan, as I mentioned. This brings to mind not necessarily, it feels like a run on the bank over the last 3 years, but China is still the major exporter of the world and is still incredibly competitive. And in the innovation space between EV and in semiconductors, it's clearly not as gimped and as hampered as what the sanctions were intended to impact. And China still remains very competitive. Within this realm, how do you position China as a competitive investment environment against the likes of the ABC trading countries like Korea and Japan, especially in this new paradigm today?
Difficult. I don't even think it's comparable, right? You got this currency issue that's not freely capital convertibility.
Yeah.
The only thing we can attract is we are cheap, right? But that's going to go away. I don't know how long, but in a year, maybe in 3 months. But on other angles, it's difficult to compete. But the good things I would say about Asia is it does have the breadth and the depth. There's a lot of volume, right? So Asia, we already have 5,000 plus companies. There's plenty to choose from. It's a very wide market. I think in our earlier conversations, we have mentioned to you one, two company that has very interesting business model that will not exist in a small country. It just doesn't call for it. You have to have a big economy to have, a variety of business model. So China has that definitely. In terms of depth, China does indeed have volume. Even in a downturn like in 2022 and 2023, there's tremendous amount of volume. That's what investors like. You can get out when you want to get out. So let me quote you some numbers from my memory. This year to date, the average daily volume is close to $1 trillion a day. Okay, it's like 0.9 something. Okay, the maximum daily trading volume during this period yet today is, I think, 1.3, 1.4 trillion. The minimum was like maybe, I don't know, 0.5, 0.6. All right. Take a guess. What is the average for 2023? That's a bad year for us, right?
Yeah.
The average was 0.8 trillion daily.
Wow.
So, okay, there's China risk, there's the ABC, right? Anything but China.
Yeah.
But if you want to be here long term, I think it's a great market, Of course, you have to face.
Sorry, is it fair to say, this is kind of coming to me now. Is it fair to say that one of the unique aspects about China, and I think maybe the close competitor might be India, is that this is one of the few places in the world that you can invest in incredible, simple companies that in any other market would be either left for dead or on the pure basis that they're too small. But because of the sheer size of China's market, they can be incredible investment plays because of the scalability and the population.
I completely agree. Yeah.
On that topic, yeah, go ahead.
No, I was going to say, I don't want to say speculative stuff on an interview like this, but...
That's okay. We'll cut it out. It's fine.
No, and we hear a lot of things, and some of these new stimulant policy and new things the government wants to do are very aggressive, very positive. And some will even, we're hearing they're going to test targeted capital account convertibility, single purpose capital account convertibility, that type of thing. So these people at the top, they're not done. The right advice will be trickled up to on his desk and for him to decide. And when the time's right and they say, yes, let's try it, and it will come out.
Yeah, I've heard that often. It's about trickle up. Hopefully the right advisors are giving him the right advice. The right type of commercial minded and economic advisors are bringing that to his table. But so far, at least in the first quarter, we're seeing the direction of these policies moving in the right direction. Yeah, hopefully we can see more of that.
Yes, I hope in the next Chinese congressional meeting, I hope the message is used to be security first, right? I hope somehow economy is gonna, maybe not first, but it's gonna move up, move up in the rank. Yeah. Or maybe even be the first, right? Economy first. Then it's a big signal. Yeah. The one thing good about that system is the system here in China is very efficient, right?
Yeah.
If the central government says economy first, you bet the machine's gonna start humming again.
Yeah, exactly. Do you keep track of, we talked about this in our last call, do you keep track of liquidity onshore, like monetary easing? We saw outstanding debt and loans kind of double in the space of February to March alone. Are you tracking those metrics as well?
Not, we tried, but there are too many letters to follow, right? MLF. Yeah. It's not like the US, right? Just, interest rate. So to the extent we can, we do, but nothing out of ordinary. But we try to have a periodic conversation with sell-side macroeconomists so that we keep a tab on the liquidity of the economy, right?
If you were to go back pre-COVID, is there anything that you would have changed or adjusted about your strategy, looking back, knowing what you know now?
Professionally, I cannot do that exercise, right? I can concentrate on one position because it has done so well. But truthfully, we have not changed our strategy at all. We have generated really good return year to date with not one position above 10%, no leverage,
Yep.
still diversified.
Yep. Well, I think this is a great time to wrap up. Congratulations, Xin. You guys have done a really great job.
Yeah.
Coming back this quarter really strong. It sounds like the momentum is still in your favor this month. We're now into mid-May, only 6 weeks away from the end of the first half. We're pretty excited about China. And I know between those of us managers who are based here in Hong Kong and Shanghai, we were coming out of a pretty bearish few years. I'm hoping that things will continue to look up. And like yourself, we're looking forward to some stronger policies. But at the end of the day, I feel like, it's really about the private sector making good on its own and transforming on its own, kind of like the companies that you're seeing perform in an environment like this. Even with all the headwinds, they're still doing really, really well. And I really don't want sort of like the headline risk to take away from their success in any way that it takes away from ours.
Thank you very much. Yeah. Thank you for having us. Thank you for, talk to you soon.
Excellent.